Is the glass half empty or half full? This is the question that Tesla shareholders have to ask themselves right now, including me, who has 9 shares, and including my mom, who bought 15 shares at $294 for some reason. She didn't ask me. She just made the decision. Okay, anyway, Tesla stock today has been absolutely decimated as we go into the screen, and you can see right here it's at $124.42, sitting at a market cap of $392 billion. This was a company that was worth $1 trillion in October 2021, which means it has lost $700 billion roundabout, or it's closer to 400, so about $600 billion of market cap in the past year, and about 58% of it this year, 38% of it since October 13th. And that's primarily because of everything that's been going on with Twitter and Elon. In this video, I'm going to talk about a couple things that I feel could help Tesla stock, could help Tesla shareholders, could help people conceptualize more about what the company can do, and also my logical sort of and a little bit emotional thoughts on if I would be buying this dip. As we look at this price right now, 124.53. If we just go to 1 year on Tesla stock, we can see that, let's go to, where we go? We're going to go January 2022. We were at a stock price of round about $400, right? 400. This is post-split adjusted. We went down. We had a nice little rally. We went down, little rally, down, little rally, down. Now a nice little sustained rally back to 300. And then we have fallen off the cliff, now reaching a low of 122.26. Tesla is trading the cheapest it has ever been. When it was at one point $1 trillion company, it was trading for about 233 times forward earnings, which is kind of insane. Now it's at around 30. So Tesla is cheap. But the question is it cheap in the valuation that you assume or want it to be cheap in? And I think this is the fundamental glass half full, glass half empty question you have to ask yourself as a Tesla shareholder or someone who is potentially going to become a Tesla shareholder. The company is worth about $400 billion. Most auto manufacturers combined kind of add up to that, don't really add up to that. I mean, it's close to that, but they're doing a lot more in terms of car sales than Tesla. They don't have the best margins. They don't have the potential for the best technology. So the bull case for Tesla is obvious. The other thing that's important to understand for Tesla is that it's growing 50% year over year. It is so difficult for a tech company to continue to grow, for a car company to continue to grow. Facebook, Google, Amazon, these companies were accelerating average annual growth rate of 40, 50%, but at one point, goes down to 10, 15, 17 if you're lucky, because it's really hard when you reach a certain level of scale to continuously compound growth. It's like, when you go from 170 pounds down to 140 pounds, it's hard to go from 140 down to 100 because it's easier when you're big. Now you have to go down. In the context of stocks, when you're small and you have to go up, it's easy. When you're big and you have to get even bigger, it's a bit harder. So the question becomes, is Tesla cheap enough for the valuation that a shareholder would be happy for, or a new shareholder would be happy for in terms of DCAing or establishing position? My answer to this question right now is still no. And the reason my answer to this question is no, the reason why it's hard for me to buy this dip, which it's a juicy opportunity to buy, but it feels a little bit scary right now. And that doesn't mean that Tesla can't go to 135 tomorrow now at 124. I can't rally another 10% being down. I mean, obviously, this is one of those days where people that are buying are likely going to see some level of return as long as the macro condition stays a little bit stable and we don't go horribly down from here because we're already down so much. But the reason I think we could keep going down, the reason I'm still a little skeptical with trying to buy this company is Twitter. At the end of the day, Ross Gerber and Gary Black, people that I respect, big people in the Tesla community, they have explicitly said they cannot spend client money, institutional money, on Tesla stock because of Twitter. Now, what is the problem with Twitter? Well, the problem with Twitter is that Elon's distracted. And Elon's distracted in a horrible way that's causing him to sell billions of dollars of shares to cover the equity margin loan. He's distracted in the sense of trying to monitor the world's free speech and censor certain people and not censor people, like these decisions that you don't want a guy trying to stop the planet from burning through climate change to have to deal with, but he took it upon himself to want to deal with these decisions. Okay, he has to deal with this stuff. So now the question becomes, is that worth his time? And if that's not worth his time, if you as a shareholder do not believe that's worth his time, does that mean you still invest in Tesla? Now the bull case is that they're compounding 50% year over year growth. Margins are going to get better. Cybertruck, all this stuff, demand, EVs, they're the best EV out there. They're going to win. Yeah, that's a good argument. The problem is that argument was never enough to get Wall Street to buy the stock. And in fact, Wall Street still hasn't bought it. I mean, there's 35% institutional ownership. It's not even 50%. Majority of it is retail. What is the argument that gets people to buy the stock? Well, the argument is a guy that has 120 million Twitter followers. I was about to say Instagram, but Twitter. It's Elon Musk. It's his personal brand. It's his cult. Now, does that mean the stock shouldn't be worth what it is because Elon has a following? No, I think factoring into a company's valuation is the marketing. And Elon is a phenomenal marketer. He has inspired the world pretty easily, by the way, just by like not having a car company go bankrupt and creating this amazing product to get people to want to follow him, to want to support him, to want to pay a premium for his stock because they feel that he's doing something good for humanity. That's all part of a company's valuation, in my opinion. I mean, it's not the biggest factor, but it's something to take into account. If the brand of Elon starts to get degraded in two ways, either he's saying so many political things that no one cares about, and it's like, why are you talking about this? Talk about climate change, talk about saving the world. Why are you talking about like transgender rights? Like that's just going to alienate so many different people on so many different perspectives. You should just try to stay in the middle. That's one way it's going to hurt his brand. The second way it's going to hurt your brand is if your time is not spent on Tesla, if your time is spent on Twitter. So if your attention is diverted from the core thesis, from the core asset that it should be on, or your attention is diverted and you're weaponizing your attention, you're operationalizing your attention to create all this divisiveness on Twitter because it gets engagement or whatever the heck he's doing, that is also going to decrease the brand of Tesla. Now, my argument here is not that Elon's personal brand going down means that Tesla stock should continue to decline. My argument here is that Tesla is propped up primarily by retail investors who are very smart and very educated. And at the end of the day, a lot of them, I don't think, as you know, institutions can take some of the bleeding. I don't think a lot of retail investors can take all of that bleeding, even if they are smart and educated. Because at some point, you can't be down 90% on this company, right? Like you have to cut your losses. And if you're cutting your losses, or let's say even 5% of retail cuts their losses, which causes more of a decline, are institutions going to buy in? I mean, that's the fun. Unless retail's buying in, institutions are not buying in yet. We know this. We have proof by Ross Gerber and Gary Black, who run big institutions that manage billions of dollars that are not buying in. They cannot justify to their clients buying a company for a guy whose attention is trying to solve free speech. They just can't do that. And they can't say Tesla's on autopilot because most of the time Tesla has innovated or got something through the door, got a product, got a major push. It's because Elon spearheaded it the way. It's why people trust Elon Musk. So with his attention diverted and retail selling out a little bit, you have to get institutions to buy in, or at least even, let's say 100% of retail doesn't sell out. Someone has to buy their stock at 124, and someone's been selling, and if institutions aren't selling right now, it has to be retail. So who's going to buy in? Who's going to buy the stock? If Elon can't convince retail to buy the stock for obvious reasons, they don't have enough money to move the stock, at least in aggregate, especially in a bad macroeconomic time, then you've got to get the institutions on board. And the only way you get the institutions on board is if you normalize or stabilize what's going on with the Tesla brand along with Twitter, and I think that has to be solved. As soon as Elon Musk finds a CEO that can replace Twitter so his attention can get away from it and he stops being politically divisive, that doesn't mean you get rid of your free speech. That just means you stop tweeting the most, like the things that just alienate millions of people from wanting to care about you or your brand, then I think Tesla becomes a much more attractive opportunity. But now it just has that hesitation risk. Now, even while I'm saying this, I still hesitate to say it's not a buy, in my opinion, because the numbers are just unbelievable. It's the cheapest it's ever been, and the only number I think that matters is the growth rate. They are growing 50% year over year compounded. They're not going to go from 50% to 20% like the big tech companies do that quickly because they still have the level of demand, output, and production capabilities to get to that 50% year over year, or 45% year over year, or even 39%. Like that's still amazing for a company of their size. $391 billion market cap. This reminds me of Apple back in 2016, about $500 billion. Now it's $2.5 trillion. They bought back stock. They did friendly shareholder things, and they created great products. Tesla can maybe buy back some stock, which I made a video about a couple of weeks ago of like Tesla, it's time to do what Apple did. They can keep creating the friendly products and they can get Elon's attention away from Twitter. Then this is a no-brainer in my opinion. It doesn't mean this is the right time. It doesn't mean you should DCA. It just, you have to make your own subjective call there. But it does mean it starts to get incredibly attractive at 124 because it was already attractive at 250, 260, and even 290. The question becomes, can Tesla get this act together? Can Elon really get his act together? Because to be honest, I'm getting a little bit tired of all the political stuff on Twitter. Like it's just not interesting to me. I'd just rather hear about cool stuff, not politics. Like the politics is always a losing game. Why would we want to talk about politics? And then I think Tesla becomes a much more attractive opportunity. But let me know your thoughts. Do you think it is time to buy Tesla? Do you think the price is everything and forget Elon? Like this price for this company, for the value of growth you're getting, that's all that matters? Or do you think there's some stuff Elon has to fix in order to be able to pull the trigger on Tesla? Thanks so much for listening and watching. Look forward to your comments. I'll see you in the next one.